You want to become an investor but don't know where to start? Here's some quick tips on how to begin your investment portfolio. Think about it like this. You have luxury class, A class, B class, C class, and D class properties. Luxury class for the average metropolitan statistical area is going to be somewhere along the lines of $500,000 and above. Now, I highly suggest avoiding these areas as they usually are not the best return on your investment and not the best use of your money. Now, when you get into A class properties, this is going to be the best type of property available. Typically, it's going to range anywhere between $325,000 all the way up to about $500,000. Now, while this might not cash flow the most, you will see the highest level of appreciation for these types of properties. Now, this is typically going to cater to some families who have an undergraduate degree or are white-collar workers. Now, when you get into B-class properties, you're going to be looking at anywhere between $225,000 to about $325,000. This is going to be your average entry-level management, young adult, or high school graduate. Now, once again, with this type of property, you will end up actually seeing more cash flow. However, the appreciation gains will be less. You're going to be appealing to a different demographic. When you get into C-class properties, these properties will typically range anywhere between $125,000 to $225,000. Now, this will typically cater to an hourly employee, blue-collar worker, or high school graduate. Once again, you will see better cash flow for these properties, but once again, you're going to be faced with credit risks and potentially somebody leaving your property in less than perfect conditions. Now, finally, we come to D-class properties. D-class properties are going to be the ones you want to completely stay away from and will range anywhere below $125,000. This is typically going to be a property that's going to have a lot of distress. It's most likely going to be something you're going to want to pick up and flip. This is going to be somebody who is, again, below the poverty line and very, very low income and usually struggling financially to make ends meet. If you like this advice on how to invest and would like some more, give me a call.